No, like live right now. I don't know why it says in 3 hours. Oh, okay. That is Eastern. I mean Pacific and Eastern. Okay, I gotta fix that bug. All right, I'm there. Let's go. Go there. We're live on right now. I don't know what I look like first thing in the morning. It's like 5:20 here, folks. 5:18. I need to fix that time thing. I was so focused on not telling people West Coast time that I actually did that. Because I always speak in West Coast terms, and I was like, okay, I'm going to speak in East Coast terms. And I messed that up. My bad. My bad. It'll be recorded anyway. Where am I? Where am I? There I am. Good morning. Everywhere I go, there I am. Can I get a confirmation of video and audio, please? No, not here. I'm going to mute myself here. All right. Now go to YouTube, please. All right, there we go. Perfect. Hello, good morning. I see you all. I messed up the starting point. Way to go, Nick. At least we don't mess up too many charts. And we are live from Southern California. Today is the 2nd. It's Friday. It's a special session. We're going to chart a whole bunch of tickers. You tell me which ones. I'm going to start with the usuals. And let's see here. First, we'll start with the indices. How about that? Hi, Agnes. Great audio and great video. I appreciate it. I keep upgrading my equipment. Hi, Pratik. I'll wait a couple minutes, just a couple minutes. Target and Costco, okay. Let me see if we have them on the list. They are not. Somebody kicked ass yesterday on Costco this week. Yesterday, I missed out. Raghu, thanks for the trade setups, by the way. I meant to sell basically a straddle on one of the big stocks that reported. Broadcom was 2 seconds too slow. The order didn't fill. I'm so upset. It would have been like $1,800 per contract or something ridiculous like that. All right, let's get going. First things first, the indices. This was the members. You've seen this yesterday morning, right? This was the pre-open chart. I drew this purple stuff and said we would be back here. We are back here and trying to break out. Okay, this yellow circle has been plaguing us for about a year. And we're finally trying to get out of it, finally. I don't think this can happen unless the small caps actually also break out. They have a chance today to redeem themselves just a little bit. Okay, let's see if they can do it. And so the morning notes are important because they kind of give us the game plan for the next couple of days. So we have the jobs number in 7 minutes, and we're going to see the reaction live. I couldn't give two schmucks about it because what's it going to tell me? There are no jobs. There are jobs. The right jobs, I don't know. But if somebody wants to get employed these days, I'm pretty sure it's fairly easy to get employed. It depends on what you want. You know, it may not be your perfect job, but there are jobs out there. So that's the S&P. The QQQ is a completely different story. That is the point of contention. I mean, they've crossed the February and they're now tackling the August from last year fails. So they're in the stratosphere. This is the laggards. In fact, you can see it better here. So this is the IWM. I need them to take this out and this out. If they take this out, which was the attempt from a few days ago, then we have a breakout. I mean, this is a basket of 2,000 stocks. They can't be at the bottom end when the other two major indices are trying to break out. Mind you, they are small compared to the large caps, but it's still 2,000 stocks. So I need them to join the party. So that's the macro. My assumption, so I started by saying 4,500, right? Okay, before 3,500. That was the tagline from about a month ago. And we were right. Why? We are buying dips, higher lows, and we're trying to make a higher high. This is February. We closed above it for the third time in the last couple of weeks. If we take out yesterday's highs and then close and do it again a little bit at a time, we broke out in slow-mo, whereas the NASDAQ broke out in a big way behind NVIDIA. We covered a gap from August. We still have this giant mess to deal with. So it's going to be difficult for the bears to cut through all of this without a major headline. So what kind of major headline? Like in March, we had a crisis that came out of nowhere, a banking crisis, a global banking crisis. We didn't know it was there. That sort of a headline, okay? And that dip was right there. So that was the March banking crisis. So they're just buying dips now. So the next dip, I'm pretty sure will have a crisis, will be bought unless that crisis changes the game. What kind of a crisis? Something we haven't foreseen. Some new thing that comes out of nowhere that is not baked in. An extra rate hike or not, that's not what I'm talking about. That will cause a little 3 to 5% dip. But something that changes the game, like if we had a complete change of the guards in the US that was unplanned for. I'm not going to go into details, but like something we haven't seen. A giant earthquake that erases half a continent or something, God forbid. Terrorist attacks. Ash in the cloud. Remember that? When was that? 2011? We had some volcano erupt, kind of like what just happened in Mexico City, I think. So, and then it shut down all airlines pretty much around the world. So commerce comes to a screeching halt. Something we haven't foreseen. Until then, 45 is the plan, plus or minus. So we have 43.50. Oh, I see. Cool. 43.50 is a target. And we are inching up towards that. We're going to have the problem of here, and we are far extended. So little hiccups can happen, and they wouldn't change the game. Now, the VIX is under 16. Those are like a few years ago, Bernanke days, VIX that low. So what do I do with that? If I have a lot of money in the market and there's so many things that can go wrong, why wouldn't I spend a few $100 buying cheap VIX calls out 60 days? It'll be like renting insurance, but consult your own physicians for that one. So what we will, how I'm proceeding is I am buying dips. That's all there is to it. If the dip comes, I'm buying it. All right. Okay. So this is the big picture. Within that, let's target your charts. I'm going to add Oracle We're going to spend 45 minutes, as much as we can, to tackle all of these tickers. And here's what I have on the list. I'll post it here, and you guys add to it as you like. So I'm going to jump to this window, close this, and we'll start here. Zscaler, I believe this is the quietest aftermarket move on earnings for the stock ever, maybe? I don't know. But it did dip and it recovered. I would not short the stock. We've made a lot of money with this stock, and it's looking to break out. If Zscaler and when Zscaler breaks out of 144, 45, get out of its way. 40, 50 bucks can come pretty quickly. So whether it does it immediately or it dips first and then does it, it doesn't matter. So if I'm long, I can stay long. If I wanted to chase it, consider it a breakout move and not a super big investment all at once. If I wanted to invest in it for the long term, I'll nibble. But if I'm trading it, I can go long. I don't like to go long going into a prior fail like this. Do it on a red tick at least. If they have a freak out moment, okay, 30 seconds until the jobs number. I think, right? You guys are curious? 25 seconds. So let's finish Zscaler and we'll go look at the futures. So I would, if I buy shares, I would buy partial position. If I buy calls, I would put a stop because it's a trade, not an investment for me at this point in time. Good company. I think it acts very well. Let's go to 5 minutes and see what that's going to do to the futures. This is the S&P futures. Basically, that's going to react to the jobs number. I don't even need to know what the jobs number are. Okay. Okay, apparently they're good. We're hiring people. Oh, that sucks. Let's be un-American and be upset if they're hiring a lot of people. The ADP jobs number, they tell me, was strong. But we've had that. And by the way, the US jobs numbers, they revised them 3 times. Since the 1970s, the average revision is 70,000, 70, and 3 zeros after that. 70,000. So if they tell us we created 100,000 jobs, it could be 30, it could be 170. So it's not that accurate. Exactly. Okay. So don't look at it. Dips are being bought. That's what it is. No reports are going to change what we know. We know what we know. Inflation is what it is. Jobs are what they are. You know it. I know it. You know people working. You're working yourself. You're buying stuff. You know that stuff is not that much more expensive. So why watch the CPI? It's not going to tell you anything you don't know. All right. Nick is using his hands. Come on. So what is going to happen with the market based on one jobs number? Nothing. So let's go back to our tickers. All right, so Tesla, I've had a lot of people trade Tesla extremely well in the last couple of weeks. I'm so proud of you, gang. That's amazing. Look at it. Same comments as Zscaler. Now this is an expanding, broadening wedge. See how it expands? And if they take out the upper end of it, they're gone. What is that upper end? 218. Easier said than done. If I were you, if I'm not long that company yet, I would buy the dip, and I would buy the dip instead of chasing up from here. Even at the risk of missing out on more upside, like immediate upside. So some people have a problem missing out on the opportunity. I'm okay missing out. I hate losing more than missing out, okay? So what I would do is I would put an alert here like this and say, wake me up when Tesla dips, and buy a call on a dip. You would pay 30 to 40 to 50% less for that same call as you would on the way up. And you would be a stronger hand, as they say. Now, the other thing you can do is wait for the breakout, and when they break out, they will dip to retest the neckline from which they broke out more often than not. Then you buy it on the dip. Same, you would pay less than chasing. But this is a stock where I'm buying dips, I'm not shorting. This area is not going to be easy, but boy, if they take it out, whew, it's going to be rocking and rolling. So this was a big problem for it on the way down. If you look at it, look right there. that was a neckline that caused it to fall all the way down to here. We covered it tick for tick. It was perfect. Well, imagine if they take it out. They will get to 260, 280. Technically, it's an inverse head and shoulders. It could even be 290, 300, 305. I didn't say it's going there in a beeline, but that would be a path for it. Apple, I don't know what they do. What do they do? Don't be short Apple. So last week, I drew this inverse head and shoulders. I said, let them dip, and they dipped because they would draw the right shoulder, but the right shoulder was very shallow. And now they're trying to break out. Look left. Same comment as Tesla. You see that? How it's repeating? Zscaler, whatever else we saw, Tesla and Apple, all three of them are breaking out or headed into a prior fail. So those are triggers and big ones. If Apple goes above this area here, 184, I think it can go to 210, 215. And I'm not a big fan of the company, but that chart is very bullish. Imagine if they start talking about AI in Apple. It seems like it's a buzzword. The more AI you have in your earnings report, the higher the stock goes. They have the money to create the kick-ass AI that they want to, and they have the clients that would pay all the money and not blink. So it's a dream come true for that company stock. So do not short Apple. Be buying dips. Short term, buy the dips. I mean, there's no near-term resistance. That's why the Nasdaq is flying. The bears capitulated. So now they need help from the headlines. Without headlines, the bears are toast. Okay. So just be careful shorting your opinions. If you think things are too high, that's not a reason to short. Okay. All right. Let's go see what's next. Google. Same thing. Google is a little bit lacking here, but yesterday it helped us make money. If you were in the live room, you saw that. We expected a recovery in the market to green because of how Google acted. Not an ideal entry point. I would get engaged on dips. Look at this area here. Anywhere inside of here would be a good place to start the position on dips. The markets are near all-time highs, believe it or not. So I wouldn't load up on everything, but it is an exciting period of time where a lot of these companies are going to have income streams from AI that we don't know what they are. I covered Tesla. You can, Scott, if I have time at the end, we can revisit it. I owe it to all the people that submitted all the tickers. So NVIDIA, I don't know why you're asking, right? So NVIDIA is in the stratosphere. There's no way I could chase it here. This is one of those TH. It is too high to chase for me from an investment perspective, and it's too hot to short. Now, if they don't come out of this white box that I have up here, so let's say they don't go out of 408, they might dip again to retest this neckline. And if they lose this neckline, these arrows will come to fruition, which is not a big deal. In fact, what's wrong with it dipping back to 350 at some point on some headline? I have to tell you, I'm really impressed with their guts of forecasts. The fact that they forecast a huge increase in 1 quarter in sales is amazing. It's like they have a big order and they're not pushing it through. They know they can push it through at a push of a button. Otherwise, there's going to be a letdown like we haven't seen in a long, long time. So this is crazy to me, what they said. They've been shrinking in sales the last 2 quarters, and then they forecast a massive increase. I forgot what it was, 40%, 30% in sales for the next quarter. That's very impressive if they can pull it off. So I wouldn't short it, but if somebody twisted my arm, I would buy a debit put spread that costs $200-300 that could bring me $700 for July. This way I don't have to babysit it. I could be up a little bit, down a little bit. I wouldn't short it in principle, but it is shortable here as a trade. Okay, Netflix. So a lot of people love Netflix. Hi, Jay. Boy, everything is so... So look at this mess. What are you gonna do? Buy dips. That's what's happening. You see this? These two parallel things. That's saying that they are buying dips from here to here, 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 from here to question mark. So the next time it dips, 5%, engage yourself long with it, then you would be doing okay. That's basically what it's telling you. The stock itself, I think, has a pop from a headline that's brewing, and that pop is, hey, we started implementing this control on the passwords and we are seeing an influx of new accounts like we haven't anticipated. Don't be short that stock. In fact, the beating of this level of 378 could bring 480. Look at the size of the cup and handle, although I wouldn't give it all of it because this might have been an overshoot. So let's just give it from 280 to $100 from 380. So yeah, 480 is doable, even if I short this cup and handle, like short the distance of it. So I would be buying dips. I would not short it in principle. You might be able to balance out an iron condor that gives you some upside and some downside flexibility, but that's pretty tricky. All right, so that's Netflix. LULU. They reported, right, overnight? Is that them? Yeah. Oh, they're back up here. Is that what's going on? They're up 14%. Ooh, doggy. Okay, nothing to see, folks. This dip covered the gap pretty much. Now they're back up at it. There is no way this is a good starting point. If you're buying it this morning because of the reaction of the earnings, you're the sucker that market makers love. Because even though you can make money off of it, it's not the right thing to do. From a technical perspective, this stock got clobbered twice up here, 3 times up here. Whoever was long here got shellacked. This person said, oh, this time it's different. This person said this time it's different. And here we are again. Now, if they take out 390, they can tack on another $30, $40. But that's a big if. Hi, Luis. Hello. Bag holder. Oh, I'm sorry. Somebody, bag holder. Maybe you can get your money back with this pop. Okay. Lululemon. CrowdStrike. This is a stock that reported yesterday. It's hilarious. First thing I did yesterday morning, I wrote up a trade for the members on Benzinga and everywhere else. And we made money like immediately. Somewhere here when it opened, I said, I want to be long. I sold puts and put spreads and I shared the trade and I went to buy calls and it had already recovered. So the puts and the put spreads delivered 50% or more of maximum gains within hours. So that trade played out. And look at it. Now it's back to its usual self. So what do I do with this? I would buy the dip. I would not start longs. Zooming back out to the daily chart. This is a ridiculous thing. So why did we go long? Because they grew sales 42% and they improved profitability 80% and they raised guidance. And then the market spits it out. That's how dumb these people are. So we have a problem at 168. In fact, it starts at 164. So anything above here is difficult. So they did dip. I don't know if that's a legitimate dip. Why not buy it into 152 or 150? The next dip, get long. They come back and take that out. Just like the Apple drawing that I did. Let them struggle a little bit and then they come and take that out. And if they do, then the upside potential can be substantial, something like this. So have patience. If you get long here, that's fine. Just make sure it will have time to withstand a couple of dips, maybe if they come. And put stops. Hi, Tad. Cool, thanks. I have people in the live room wondering what the hell's going on. Usually I'm already sharing in the live room. But because we're here, it's a special day. Okay, we have DELL next. I don't know why you guys bother with that one. It's a totally manipulated stock. Mr. DELL is a successful guy. Is it private? Is it not private? Is it public? Is it bought out? The dip was forecasted by a wolf wave. They're falling into support. You could buy the dip if you're a trader. On earnings, I think it's about $44. They released the earnings middle of the afternoon yesterday by mistake. That's why you see that dip and rally and dip. It could bleed back down to 43. 43, 42 is support for DELL. I'm not touching that stock. AVGO, Raghu, thanks for the trade. I wish it filled. the stock is not doing much after hours, right? And he has suggested selling a basically an iron butterfly, so becoming a market maker. It would have paid thousands. I sent the order. I was answering questions. I went back. It hadn't filled. Seconds. I missed it by seconds. That's okay. There'll be other ones. No way this is a good entry spot. Okay, a stock like this is not a good base for the future. Like I said yesterday, I'd like to meet the person that bought it up here. When a stock does that, and I love that stock, I just take it off my watch list and put an alert. I would do this. I would put an alert, wake me up when it goes back to earth because I liked it, I missed it, let me catch it the next time. That's how I would trade that one, which is no trade. Meta, same story. Do not short it. I have a lot of people, Bill, I have a lot of people that want to short every spike in these mega caps. Let me tell you why these are running. They're running on hope of future business that we don't know how to quantify. This is the dot-com theme. The dot-com era was like this. Oh, we've got this dot-com thing. Go back and watch videos of the Today Show or whatever, that Katie Couric, wherever she was. Like I'm talking before, as the internet was launched. And hear them talk about the internet. What is this, the dot-com thing? It's a comedy, right? But it was real. It happened. So it was like, what is this, the dot-com thing? The same thing is happening with the AI thing right now. The only difference is that these are companies with giant bags of money that can make stuff happen. So it's not the dot-com mania. It is the same spirit. It's a big, like, unknown. We don't know what the metaverse is going to do for this company. I think it'll be great, but how much money they're going to make out of it. So that's why I wouldn't short it. It has a gap at 290. I wouldn't go long it either unless I'm actively trading. So if I'm an active trader, then I would look at these charts and decide where is a viable dip level. For example, I tell you 269 could be interesting in this one. If it gets to 265, that's definitely a short-term buying opportunity. Look, every dip is being bought. So that would be a considerable dip into prior support. 266 to 265 area is buyable for sure. All right, so don't short it. Don't be tempted to short it. It's easier to short the indices. So if you want to short these guys, short the QQQ. With a simple debit put spread, $10 wide. You buy a put, you go $10 lower, you sell a put, you pay $300, you can make $700 if the markets drop 5%. That's it. Put it for July, end of June, early July or mid-July would work. If you wanted to short everything without having to sweat each stock, that's how I would do it. Let's see here. We have Meta GLD. I'm gonna okay, we'll do the GLD. Okay, let me see here. I'm backing up to 30 minutes. I'm 1 hour. Okay, you see how many times it's failed around 185? All right, and it's failing now, but they are buying dips for the last 5 days. That's good news. Take out 185, 184 and a half. You might get another $1.50 out of it. That's the short-term trade. But if you zoom out a little bit, they've been selling off a little bit and they're struggling. So I don't know. It could be a good starting point for mid-term trader. So you might be able to get to 188 before struggling again. If you take out 190, 191 and a half, the upside could be substantial. We shorted this and made money immediately. I'm long silver and making money for the group. I shared bot calls. Bot calls were green yesterday, and sold put spread. That also played out green. Hi, Linda. Hey, Reggie. We'll see if we can get to all your tickers. All right, so that's GLD. The SLV, same story. They look identical. We have resistance short term, but we could be making progress, turning for another buy the dip opportunity up to 23. We'll see if it materializes itself. I believe also that was a seasonal bet. Like seasonality wise, it was a good time. I'm not sure about that part, but the chart looked okay. AMD basically regurgitate everything I said about NVIDIA on AMD. They are buying dips. I challenge them to take out 127. And if they don't, I bet you they will lose 116 and a half and fall towards 110, 108, which would be just fine. It's just part of growing up. Look at the targets they met. These arrows were here before the spikes. I promise you, the members have seen them. So just like these arrows came true from yesterday, if we did that 60 minutes, we do draw arrows and they most often come to fruition. The purple arrow you see here was drawn yesterday in the pre-open note. And here we are at the top end of those purple arrows. So do homework is what I'm saying. It pays off. This failure was not crazy. That was foreseen. This target was not crazy. And so dips are buying opportunities. This did not happen here. So I would repeat that comment up here, you know, buy the dip opportunity, at least fill the gap. So what's wrong with filling the gap and then coming back and taking that out in the next couple of months? That would be the normal thing to do, right? Okay, SOFI, I'm out. Made us money, struggled a little bit. We went long just before the dip. This one here went long at 5.7. It fell. I added calls in the live room and then it did this. I exited here somewhere in the low 6s, which is fine, but it was a huge win for me and I was running out of time. I would be out from a trading perspective. If I'm an investor, I can leave some on. Going into this cluster, this is a headline stock. Student loans, no student loans, BS this and BS that. Forget about it. I don't want that to dictate how much money I have in my pocket. Headlines are stupid. So SOFI, good win. Long-term, decent company to hold. I just don't know much about it. Bud, really? Come on. Okay, so I want you to be cautious, not trading what you see on Instagram. When you see posts saying, oh, down billions and billions, what are they talking? Down in market cap, down in sales, whatever. Get the truth. I don't know what it is. Do your homework on that one. This stock rallied from here to here and gave back half. That's normal. So far, there's nothing unusual. This rally was too frothy and they're just giving it back up. So it could drift down to 52 or 50 and that would be an entry opportunity. Political stuff aside, okay? So I don't know what the hell's going on with that, but I wouldn't touch it, same as I wouldn't touch Target. And it's coming up. Somebody asked for Target. Same reason. Okay, so the idea is to avoid headlines that I cannot control. Eliminate as many unknowns as possible, right? And then we have Lucid. Oh my gosh. Akram, are you here? So Lucid, the company, if you love the company, you should hate the management. They just caused you a grief yesterday. Rivian did that not too long ago. They diluted their own stock. They said, you know what? We need money. We're not going to go out and borrow money. We're going to punish the owners of our stock by issuing more stock. Boom. That's a normal mathematical reaction to the headline they produced. So if I'm long, I'm not adding. You need to do homework on this company to find out their production. The cars are great. They're beautiful. They have a good reputation. Perception is everything. And they're super expensive. So by definition, it's a niche market. Not too many people can afford 150 G's for a car that's unproven for the long term. But it is a status symbol. So if they can make 11,000 cars, I think they're going to sell 11,000 cars. So you need to know how many cars they can make. That's what it sells, the stock moves on. So short term, buying dip opportunity. If you ever wanted to own it as a stock, I would nibble and forget I have it. Hi, Joseph. Hi, Scott. No banks are lending. What do you mean? I get lending offers all the time. They're not lending to people who they would love to lend to people who don't need money. That's what the banks do. They send lending information to people who have a lot of money in the bank and make a lot of money. They don't want to take risks. The banks are risk averse because their short-term borrowing costs are super high thanks to Powell. So he broke the inversion of the yield curve. That's why it brings recessions, because the banks will be not incentivized to lend. Luckily, the government lent everybody $5 trillion. And if you don't know how much that is, if you spend $1 million a day, $1 million per day, it will take you 2,740 years to spend $1 trillion. We've had, what, 5, 6, 7, 8 of those thrown in the economy in the last 3 years. That's a shit ton of money. Oh. No cussing here, Nick. Let me see here. Where are we at? Lucid. BITO. Love BITO. We're long from the low 10s. Look at how accurate they are. I drew these lines. I don't know when or why. but they're bouncing off of them. Let me show you something here. I think I have BITO here with lines to show you that. Yes, okay. Let me go to 1 day maybe. All right, so this is the daily chart on BITO, and this yellow line right here, I drew weeks ago, if not 2 months ago. When we were here, I drew this yellow line. Look how organized it is behaving to that yellow line. So I'd say that was a pretty good forecast on top of these ones before it. So it's doing what it's supposed to do. It's rising inside this ascending channel. They're buying dips, and it could fall to 13. And if I'm not long, I would get engaged with at 13. So there's nothing to see, basically. Whenever it makes the headlines and it starts creeping into regular news that BITO is collapsing, nibble. BITO tracks the Bitcoin, except so you can basically trade crypto without the riskiest part of crypto, which is your money walking away. Because I have a crypto account, and for now I can get into it, but I have no idea why it wouldn't disappear. Like the other crypto account, FTX. Luckily, I didn't have my money in FTX. I have my money in crypto.com. Not recommending it, just that's the one I chose. So far, so good. Every time I log into it and it hiccups, today is the day I lose my crypto money. But it was a speculative bet, and luckily it's doing super well. In fact, it's way better performance than my normal portfolio of stocks or trading portfolios. It's a great tool to trade. Disney, time to nibble long. I would be long Disney. A credit put spread to start, debit call spread to add. If I wanted to own shares for the long term, I would nibble a little bit. I want to warn you, if they lose 84, they can probably drop to the low 70s on Disney. So I would be long. I think it could trace back up to 100 plus. Amazon, my favorite my favorite store. I find myself browsing Amazon like you do Instagram. Buy the dip opportunity, yes. Chase it. What was that on oh, that was the wait. What happened to Amazon? How did it go to Lulu? Well, let's go here. Something's weird. Amazon. I'm in the buy the dip mode. I mean, you could own it. It's going to follow the market. It's a good company. The super spike from the earnings, they're putting that behind them, that red line. You remember that spike from earnings that was so big, so bad? They're putting them that one. I said they would need a miracle to come through. Well, the miracle came from NVIDIA. NVIDIA broke the bears because it levitated the entire NASDAQ, and all the NASDAQ companies are huge contributors in the S&P, so it just broke the bear. So Amazon finally broke that out. I wouldn't short it. I would be in the mode of finding entry opportunities that are not going into prior fails. Now, the problem for the bears is that the fails are so old, they're not very effective. Like here's a line, 125.4. Okay, so I would not want to be long into 125.4, which is 80 cents above here. So if you're not long Amazon, where's the freaking fire to jump into it right now? Where is that fire? There's no need for that. Okay, so make sure to pace yourself and be realistic with your expectations there. All right, that is Amazon. I'm almost done with the list, and then I'll look at the ones that are got added. Target, not for me. I wouldn't touch it. It is a political football right now. I don't know if what I'm seeing is true or not. Go to the store and see if you can verify all these claims you see on in social media. Technically, this is a target of that breakdown once they lost this one and that one. So it could bleed lower from that perspective. Let me share with you what I'm saying. When the stock goes from point A, which is 230, to point B, and then consolidates for months and then loses the consolidation. So what I'm telling you is target, if not above 140 soon, can bleed down to 100 or 98. So I am not getting long. 120 is a good solid support zone from back in 2020, so pandemic. But I don't want to touch it. What if it's going to 90? not for me. So if you want to go long and sell little rallies, that's fine. Unless it can recover 140 plus or minus convincingly, that thing is in deep, deep technical trouble. Forget the headlines, technicals. Costco. My Costco and Target are pretty close to each other, actually. 515 plus will bring you 530 or 540. 540 could bring you 555. So it's tag teaming bulls. We have higher lows, lower highs, giant battle. The bulls have momentum. I would be in a buy the dip opportunity mode. These two rectangles were areas of interest and they cleared them. So now they become areas of support. So dips are buying opportunities if we get them. If you're long, that's fine. Just make sure you trim some profits and lock the profits. These two arrows were available. They came to fruition. Trigger 515. Nice, that one right there. Whatever that spike was. What's the date today? In the next 2 to 3 days, maybe by Monday, you will have a headline on Costco. They report on sales for the month of May. Those usually move it. If you look every month, they'll have a spike in the first week of the month. It's like earnings. So if you sell spreads, be careful for that. Be aware that that does happen. Oracle. I'm going by the list of stocks that you guys have submitted now. That looks like a nice little breakout. Talk about a dinosaur surviving the dot-com bubble. Yeah, there's no way I'm going long that stock right here. Look at it. So this is a monthly chart. When was that? December of 2021. Now, if they take that out convincingly, the moon. So if you're that kind of person, good for you. I am not that guy. I say I missed it. Don't short it. Do not short it. Buy dips into the ascending channel. We have an ascending channel. They're buying dips. That's the best way. That is a surprising result. I mean, that is amazing. Is the proposition getting improved that much? The financials are pretty stable. I don't know why it's accelerating like that. That's crazy. But kudos. Good for them. All right. So we have Microsoft and Team. We haven't done Microsoft. That's crazy. And Twilio I saw. So Microsoft. I bet you same comments as Google. Buy the dip. And these arrows were there from before. When we were here somewhere, I said, don't go long here. Buy it on a dip. And that happened. Let them draw the right shoulder. That happened. Kind of like Apple. And that would be the target. And they're almost there. Look at these fails. Respect the bears up here. Those sellers were hardcore sellers. We're going back into it. It's not a good starting point. Buy dip opportunities. That would be great. That would be my modus operandi with that one. Okay, so that would be the case with Microsoft. Shorter term, you can see those. Let me give you numbers. We have 338 and 326, 325. So you can put a box around this area and then zoom out to see where the box lives. So if we go back to the daily to see where that lives, you see that where that is? Okay, so this is an area of interest. So they're going to probably ping pong inside that area. If you take out the top end of the white thing, they'll probably accelerate. This is if the price action just meanders up and they break out finally, that will be another target higher. Okay, Microsoft Team. 190 is a problem. I would not go long into 190. You take out 190, probably 189. You can get to 210, 215. So buy the dip mode would be great. This is a broadening wedge that's coming with, it's large relative to the pull that came before it. So not sure it's going to be easy to bust out of this. That was a pretty big fail. So I'll put an alert here and I'll say add alert. Breakout from wedge question mark. This will prompt me to come check it out. Buy the dip into 168 or 164. That would be a good way to get long team. Buy the dip. So you can put an alert here and you say buy the dip for the curl up. I know what that means. These are for me. So what I'm saying is, why not let it dip on whatever news and struggle and then come back and then take that out? Boom, gone. Whoops. Now I have to fix the stupid arrow. There. Nice fake. All right, so that kind of a thing. And Twilio's next. Made good money on Twilio, got stopped out for maximum gains. Unfortunately, I played my hands incorrectly. I sold covered calls. That stopped me out at, I forgot what it was, 100%, 200% win. We were long calls in the 40s or 50s anyway. Sold puts at 39 to finance the purchase of calls. That was the process that I thought it would break out with, but it broke out straight up. Now it's going into a giant area of failure, but it's big. Do not short this, buy the dip in that one. So I'm looking for another dip when people hate it so I can get long. Until then, I'm not going to do anything with it. AT&T, somebody's asking. Oof, what's going on? News on AT&T. The company sucks. Newsflash. I knew that. What's going on? Earning adjustment? What, did they pre-announce? Term sheet related to offering. Ah, they offered. Nice. So was that convertible notes? So they're diluting their share. They're another company that loves to screw its own shareholders to create cash. All right, so check it out. I don't like the company. I've done business with them, and every time I've done business, they've disappointed me. So you can go long into 14.5, and if you lose 14.5, it'll probably go to 12, maybe 10. So you can go long with stops. There's no support after that. It's too old to matter, if at all. So what levels are these? These are levels from 2003. Great job, AT&T. Great job. So just be aware that management is underwhelming at best. It is an entry opportunity with an immediate stop. You can buy shares, you can buy cheap in the money calls way out in time and sell puts to finance them. If you sell puts, you commit to buying shares. So don't sell puts unless you want to buy shares. If you don't know how to do that, pop into the live room with us and I'll teach you how to do that. In fact, I think I did that yesterday. That same topic came up yesterday. If this is your first time here, don't forget to subscribe to the channel because we do these sessions and put the bell notification so you would be told when we're going long. Somebody's asking for Roblox. If I missed your stock, please re-enter it. I can't scroll back up, okay? Please re-enter it. Let me see here. RBLX. I don't trade Roblox anymore. It's looking like it wants to break out. Inverse head and shoulders. If they legitimately hold 41, they can get to 46 on this breakout. In fact, the target is much higher, would trigger that. So stay long if you are long. You have a pretty good shot at here. And if you're not long, you're looking to get long, buy the dip into 41 as a trade, not an investment, or chase the rip from 42, 43. And when they rip, wait for the dip. Don't chase it up here. Wait for the small dip. They always do. Applied materials. AMAT. How we doing on time? Okay, we got 10 more minutes-ish. And then we wrap up and then we exit. Hard stop. I have people to tend to. Applied materials. Short term, 130 is a pivot zone right here. 125 is a pretty solid support. Anything below 125. Um, 10 more minutes. I'm talking to somebody in the live room, a new person, so they don't know what's going on. All right, breakout from here should have much more upside. So this is a wait for the dip to get engaged. So they did break out from here. So if we do have dips, we do have support, they probably find footing. And if they come back and take out, they can finish this job here. Okay, so that could be it. If not, this area is a buy the dip area down below. So this is like the slower comments. This would be a buy the dip zone. Let's say this dip goes the other way. There's a chance that somewhere around here they decide it's like, oh, okay, no, we want to do this instead. We'll put that in red. So they'll have a fork in the road somewhere around here. I'm speculating. That looks good to me. So get engaged here. You put an alert here for AMAT. Okay. Who do we have? Let's see. BAC, July expiration. BAC. I'm not touching banks. I've had enough fun for 1 year with banks. There's no need to do anything with BAC. It could bleed down to 24. 26.5 looks like solid support. If you want to be long for the long term, get engaged with that. If you beat 29.2, you could get to 30.5, like the most boring company right now. They are selling rallies. Rally sold, rally sold, rally sold, question mark. And if it does get sold, does it stop at 27.7? If it does, then they get to 28.50, 60, 70. Palantir, I'm waiting for a dip. We were long. I exited too soon with profits. It was like Twilio, it was a giant win, but then I heard that Kramer was getting happy with it, so I got out. If the dip comes and they come back and take out where they're failing from right now, Moon. Okay, that's a good company. It's just I don't like it when a company rallies 100% and now everybody's interested in it. My entry cost was 7.2-ish. Where were the people at 7.2-ish, right? And now you're just chasing. Not for me. I don't like to chase at the risk of missing out more upside. Buy the dip opportunity is my mode with that one. Okay, buy the dip opportunity. So that's Palantir. And I do like the company. I went long ferociously when everybody hated it for stupid reasons. Spotify, yes. Bill C, Spotify, yes. Like 4 times in one spot. Yes, 5 times in one spot. Got you. Okay, Spotify, not an entry point. It's going into a massive fail with a big resistance area above it. This is a buy the dip opportunity. If it dips, I will get engaged. If I'm investing in Spotify, okay, why didn't I invest in it when it was down below that? It's up almost 100%. It could bleed to 164, but as an investment, I'm not rushing. As a trade, I would be buying dips. 160, it's shortable against 160 and 164. So somebody shorts it here with stops. Okay, I see why they're doing it. That's where it failed miserably before. So I would put an alert at 145, 44 to get notified. 144. If it comes back to 144, I'll start looking for an entry point. Maybe I'll get it into 137. I wouldn't short it. That's my bill from the live room, of course. I wouldn't short it, but it is shortable with stops. Okay, so who do we have? Who did we miss? Spotify. I'm scrolling back. Verizon, Enphase. Okay, so Verizon, I said buy shares the other day, and it's down today. Yesterday we were making a ton of money. What did they do? Headline, they're diluting their shares. What? Cut the dividend? What'd that do? So Amazon is working with somebody else that competes with them, T-Mobile. Ah, okay. Not a material thing. If I own shares, I would not get out of them because of competition. Customers of Verizon love it. They're not going to leave them for T-Mobile. This is a disappointing loss, though, because my entry point was against support. Luckily, it pays probably now 8% in dividends. So yesterday we were up on the stock quite a bit. I don't know if I sent a note to trade it or not. I may have. It is a good investment that pays 8% dividends. So I would not be shaken out by this one headline. It's a disappointing headline for sure. Enphase, I went long by selling puts for the gang, and I suggested buying calls from a swing trade opportunity. It could get to 220. So if I have longs, I would be in them. However, 190 is going to be very, very difficult. So it's not going to be easy to get through 190, okay? So be careful what you do there. So before you leave, I want to remind you that if you don't subscribe to the channel, that's most important. The likes are good. Thank you for those, by the way. Not enough of you have them. So if you haven't done that, do that, please. But the signing up for the YouTube channel just gives you whenever I post something or whenever we go live. And we do that often, maybe a couple times a week to do homework. It'd be fun to have you. And put the bell on so you get notified. Today I messed up the notification. East Coast, West Coast timing type of a thing. End phase I would be long. So we have end phase and then we have Verizon. Now I'm bummed about Verizon. It's a good stock, it doesn't deserve it. Who else did I miss? We have a couple more minutes. What's the strategy on end phase? You missed it? Okay, it passed. We sold puts and the puts played out. I may roll them up and sell more puts, and owning calls or owning shares would have been a good swing. We had that discussion earlier in the live room this week and at the end of last week. Yeah, Twilio, you're telling me. Let's see here. Who did I miss? I'm scrolling back up. I didn't skip. Okta. Okay, Okta. Got long Okta yesterday after the dip. So yesterday it dipped. Also had a good report. People misinterpreted it. So I sold puts into the fear or put spreads. So Okta was a buy the dip opportunity for me from a trading perspective. From an investment perspective, the company crushed it. And just people wanted to see more. I don't know what the hell they wanted to see. XLV took your call. Oh, okay, Liz. Hi, Liz. So yesterday we went long, or 2 days ago we went long XLV and immediately had profits. You won't believe why we went long. Oh my gosh, it was so cool. Because of this guy right there. This is a seasonality thing that they keep repeating. So it's the same pattern that repeats itself. So we did that. Speaking of seasonality, we went against the fact that this is a weak month and we're immediately getting paid. I sold puts, bought calls in the XLV. So I should be pretty profitable if we have a rally, and the risk is minimal for me to get engaged lower. So that was a good call on the XLV. Hopefully it'll deliver a lot. BITO, we already did BITO. Roblox, we already did. Tesla. Okay, I think we did all of them. We have 4 minutes. Do you have any last minute questions? Let me know. Too late to sell Okta puts. Too late. It's not too late, but you're not selling them with the down move. Selling them when the market is falling apart on a day where it's falling, the implied volatility of those puts are huge. So you're selling at a big discount today. You can still do it. You can do a credit put spread. I don't remember the levels I chose, but I'm pretty sure they were in the 60s maybe. Oh, I remember. I went to August for myself because, yes, first thing, Jean. First thing. So when later today, this video will be released to watch. Watch the first 5 minutes. And you will have your answer in details. Okay, that's correct, Scott. Thank you. So I went to August and to the 50s for Okta because I had already trades for July and I wanted to spread my risk across. AMD, Intel, Uber. We didn't do Intel or Uber, so we can do that. Intel is an underwhelming company. I would not go long into 33. If they take out 34, technically they can get to 38, but this management team does not deserve my respect, so I won't give them the benefit of the doubt. I did that too many times. So buy the dip in Intel into 29 maybe, but they're having their lunch eaten and they don't even have a clue as to what to do about it. So they don't even have a plan that they talk about. Uber. Not an obvious entry point. That spike scares me, so anything above 41 is not an obvious entry point. From a trading perspective, dips into 36 might be interesting, but I think if it gets there, it could bleed to 34. So now you have a problem at 40 and a half. 40.5, and you have support around 36.5 to 35. Trade that range. That's Uber. Okay, I think that would be the last one. We have 2 minutes. I want to spend that 2 minutes to thank you guys, thank the team members, thank the members. We do this every day. If you're not a member, believe it or not. And before I go, I know I'm not supposed to do this, but can you please hit the like button if you appreciated the effort here today? MongoDB, so we can do more of it. Okay, so what do you want me to say about it? No, not an obvious entry point for MongoDB. You missed it. The easy work is done. Okay, so make sure that you don't chase blindly. All right, folks. Let me see here. We have 1 more minute. 60 days out. Okta calls. Is it okay to get into calls on Okta? Joseph, fine. Yes, but make sure you put a stop. So let me take the last minute. We already did that. AT&T. Take the last minute to remind you that whatever you do, don't be so convicted. Don't have so much conviction. Leave room for doubt. It's a shit show out there, folk. The world can fall apart in a minute, and you need to recognize that you don't know what you don't know. Okay, I know that. So I know that I don't know what I don't know. You're welcome, crypto golfer. We will have a profitable day. I promise you that. What you can do is take partial positions and put stops. So whatever position you take, make sure you say to yourself, I will not let it go beyond here in losses, and I will book my profits here. Leave money on the table. Like Verizon, if you booked your profits fast, you would not be inside of a red situation. That's just a silly example that just popped into my head. But that was an investment for somebody that wants to make money off of income. All right. So have conviction, but not too much conviction. Again, thanks for being here. I have to, yes, they all did. They all did. Lucid yesterday, AT&T, and Verizon is falling on some stupid headline as well. Not dilution, but stupid headline. We're almost at 100 likes. Can we do 100 so I can sign off? Knowing that we have 3-digit likes. The last session got us 140. Well, 120 during the session and then 20 after. So please help us out with that. And when I post the video, I will go to Twitter and post it. And if you follow me on Twitter, I'm at RacerNick. No K. I forgot to say that. At RacerNick. Retweet it. That would help as well. I appreciate you. Signing off. Where is my button? All right, we're going to end the stream rudely. I'll see you next week.